Today, we are visiting MyFreedomBank.com in beautiful Colorado with financial advisor Marc Solomon and author of Stop Being Poor. We were excited to learn what Marc is doing in shifting mindsets on money, banking, and finance. MyFreedomBank.com is setting new frontiers in how people think about money. We are here to find out what the buzz is all about and why Marc's unique message is so different.
Why do something different? Ever since 2008, people have realized that they can lose a significant amount of money in their savings and retirement incomes. I'm going to suggest a radically different way of thinking, and it has to do with how you think about money and cash. There are three primary misconceptions people have about money. The first one is that you have to borrow money from other people. The second is the only place to save money is in a commercial bank or on Wall Street. And the third one is that you have to expose your savings to high risk and the possibility of loss in order to get ahead.
Because Marc Solomon is doing something very different in finance that we haven't heard of, we wanted to find out more information and see what kind of concepts his clients are learning at MyFreedomBank.com, and also what concepts may be difficult to understand.
The major problem people have is that they are giving up, on average, about 30% of their money, knowingly or unknowingly, due to losses. Those losses are paying interest on money they borrowed from others, paying fees on the use of money, and not getting paid properly in interest for the cash that they have. There's a key concept that I would like you to learn. It might be difficult. It's one of those things I try to change in people, and that is cash has value. The money that you save up over and above your monthly costs is cash. That cash has value, and it's either making interest for you or it's making interest for somebody else. When you use cash to finance something that you have to pay for, want to pay for, or even for a good investment, you have to make a plan to repay yourself with the interest you would have normally paid to somebody else, or that the money could have collected for itself. Or else you're cheating yourself, you're cheating your family, and you're cheating your future.
Putting today's market in historical perspective is not reassuring for savings. From stagflation of the 70s, to Black Monday in '87, to the dot-com crash, to the Great Recession in the 2000s, we know the stock market has bubbles, making it a modern-day casino for those who want to invest. MyFreedomBank's philosophy on earning money is to place savings in something that always has gains, not subject to the ups and downs of Wall Street. We were anxious to hear from Marc on how he's teaching others how to leave the system.
You probably never thought of using a life insurance policy for savings and for loans. Most of us use credit cards or bank loans for cars or appliances or for trips or anything that we need to buy. But that gets into losing money again, losing interest paid to others. When we build up money in a life insurance policy over time, we have access to parts of that as collateral that we can take a loan out against. Every year, you put money into that life insurance policy as a premium. Part of that premium becomes available to you as a cash value. Now, that cash value can be used as collateral for a loan. That is, you can take out a loan for as much cash value as you have. The interest you pay on that loan doesn't go to somebody else. Because remember we said this is from Mutual Insurance Company? This is a company that you are part owner of. And instead of that interest going off to somebody else, to one of a company's stockholders, it goes back into a company that you're part owner of. And guess what? If that company does well, does better than it expects to, you being a part owner will then benefit from part of that success. So what we like to say is that you're able to recover the interest you would normally pay to others, thus dispelling the illusion that you borrow money from others and lose money to them in interest and fees.
Most people have some type of loan on their car, home, or business. These individuals are generally contributing a big part of their income towards interest, banking fees, and lost gains. The concept of privatized banking is about reducing those costs, both known and unknown. Through our investigation, we found that Marc is teaching others on how to stop being poor by stop losing the money that's being wasted in the banking system.
If The first is that I've been working for a very long time in my career, and during that time I have experienced 2 market crashes. In each of those market crashes, I lost about half of what I had saved up. And at the times when those happened, I felt like I was young enough, I had enough working years left in my career that I could make it up. I looked at it as just a fluctuation in the market, that I could make it back. I don't think that way anymore as I'm nearing retirement. And furthermore, having experienced 2 market crashes like that where you wipe out half of what you have, I don't need to go through that again. So I was looking for a way out of the market that would still give me an opportunity for growth. And this certainly brought me that with virtually no risk. So very, very comfortable with that. The second reason is the personal banking aspect. The fact that I can actually set aside money as a part of this program that allows me to tap into and to draw from as needed and then pay myself back with interest and watch it grow in a very flexible manner. The third and probably most important thing that really just kind of clinched it and made it a no-brainer is the death policy aspect of this life insurance program. It's unbelievable, and for that I'm forever grateful. Marc has really introduced me to a life-changing opportunity.
One of Marc's unique philosophies on finance is that if people treat themselves, their families, and their business with the same respect that they give creditors, they will end up on top. We wanted to hear Marc's thoughts on how this is done.
Let's talk about the difference of accessing your money using privatized banking versus a credit card or a bank loan. You can access as much cash value as you have as collateral to take a loan out. You don't have to fill out any papers, ask for any permission. You can use the money for whatever you want. And the big difference between that and every other way of borrowing money from other people is that you decide the terms of paying back the money. Now try doing that with any other kind of bank loan or a credit card. When you borrow money, since you don't have to explain what it's for, you can use it for anything. If it is for a major purchase, if it is for education, if it is for a vacation, or it could be for a real investment. Not a passive investment, but an investment whose risks you understand and know deeply. So whether it's a hot stock tip or the best friend's next door's business, the next big thing, you can make that choice. If it's your own education, if it's your own business, you can make that choice. But it's always important to remember that you must treat yourself as you would treat any other bank, and understand how you're going to pay back your money with interest so you don't cheat yourself.
After visiting MyFreedomBank.com and interviewing Marc Solomon, we discovered that Marc's privatized banking creates new frontiers in the way people achieve financial freedom. To learn more about Marc Solomon and how privatized banking works, please visit MyFreedomBank.com and check out Marc's book, Stop Being Poor, on Amazon and Audible.